please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Hi guys, good afternoon. You're watching Business Lunch. I'm Sonia. It's actually a quietly positive day, you'd have to say, for the markets. So far, the going has been good. The Nifty has held steady above the 10,700 mark. More importantly, the mid-caps which were slightly under pressure the last few days. The mid-cap index too is not looking too bad, up almost about 0.5% or so. What's leading from the front this afternoon, as we mentioned, was a lot of the result reactions. Consumption is the story of the moment. So names like Asian Paints, Titan, Nestle, all doing quite well post their numbers. Asian Paints, in fact, tops that list. And on the downside, it is this disruptive move by Reliance Jio, which is really causing all the incumbents, the other incumbents, Bharti, Idea, etc., to be under pressure today. But all in all, it's actually a good day, a good Friday to trade for the bulls at least. But across the globe, European markets have opened slightly higher, supported by a strong trading session seen in both Asia and in the US. Meanwhile, oil has continued to rise, so there's no letting up there, still above $77 per barrel on crude, following news that the US could be pulling out of the Iran nuclear accord. In other news, US President Donald Trump is expected to make a speech later tonight on lowering the price of prescription drugs. The key focus of that speech is likely to be on how to increase competition, get more negotiating power, and find ways to lower pharmaceutical list prices. Okay, well, that's what to expect later in the day. But let's talk about the big movers now. Asian Paints, Titan and Nestle are in focus post their Q4 numbers. Titan is the only one which is slightly subdued, but it's had a really great run up until now. But the numbers overall, nothing to complain. Mangalam joins in to give us more. Mangalam, over to you.
Absolutely. Three frontline stocks from the FMCG space, all of them doing fairly well. Asian Paints had a fresh 52-week high. Nestle had a fresh record high. Titan, remember, has had a stellar run, so valuations are a bit disconcerting, which is why we're seeing the muted sort of move in today's trading session. However, let's take it first to Asian Paints. Domestic double-digit volume growth is something that the street liked. Another thing that they liked was there was no deterioration in the EBITDA. In fact, the company went ahead and posted an EBITDA of 840 crores, pretty much in line with what the street was expecting. Add to that, the brokerages, they were fairly sanguine given the management commentary on demand growth. So Jefferies, for instance, said that after 3 quarters of underperformance, a management commentary on improving demand conditions is something that they like, whereas we saw an upgrade come by. Macquarie, for instance, they believe 13% volume growth is the order of FY19. On the other hand, Titan, yes, the revenues were a tad bit below expectations, but they came in on a high base, and the operational performance, that one was the one that really stood out. Management was sanguine about 20 to 25% growth in their jewelry business going forward, and if that were to happen, the margins would improve too. Brokerages were pretty happy with the performance, but valuations again is the problem. Deutsche Bank, for instance, says that the only risk for the stock is the valuations trading at 50 times 2-year forward earnings. And finally, to Nestle, cross-margin led expansion on the EBITDA, and that caused a 38% growth on the company's bottom line. Comparable domestic revenues grew by about 13.4%. Management saw a lot of broad-based volume growth across categories. I'm excited to watch out for what they do in their breakfast cereal category, which they've announced their foray into. And as a result of this performance, all the brokerages that we've seen this morning, be it Credit Suisse, be it Jefferies or CLSA, they've raised their target price on Nestle unequivocally, and all of them above the 5-digit mark for Nestle.
Okay, breakfast cereals, very interesting for all the health-conscious people out there. Thanks so much, Mangalam, for joining us. But let's listen into the managements. In fact, we did get a chance to speak to managements like Asian Paints, Titan, etc. Let's see what they had to say.
East and North, the demand was much stronger. The South was weaker. Our growth is intrinsically linked to the growth of the Indian economy or GDP. Because of our share, frankly, it's very tough to grow at a phenomenally higher rate if the paint industry doesn't grow. And the overall paint industry is linked to construction, maintenance, housing, and a whole variety of things, and the general employment generation in the economy, so to speak. Unless these all perk up significantly, and the economy grows at a faster rate than it has in the last 3-4 years, it would be difficult to grow significantly higher than we are currently growing. The price hikes we have taken were on the basis so far of what we had seen as the Q1 inflation this year. But the rupee volatility is a little higher than we expected. So we'll have to see how that pans out. And if required, we'll take further price increases depending on the rupee. Rupee affects us much more than crude per se, because our solvent-based paints is a much smaller fraction of our total turnover.
It's been a phenomenal year. We've done well above our own internal plans. So in terms of revenue, I have absolutely no problems, even if it seemed to be a little lower than what was expected by the street. And that's also because of certain corrections that we had to do in the watch business. We did a consolidation of the redistribution stockists, and that would mean that at least the growth in the watch business was muted. We did extremely well last year in the first quarter. So to that extent, I can't say we will grow 25% every quarter, but that seems to be the goal, between 20 to 25% for the year. And that is something that we are gunning, and we hopefully should be able to achieve that. Okay? The confidence level is reasonably good. Overall, I think we should be able to maintain somewhere our gross margins. And even if we fall a little, I won't be worried, because I think EBIT margins can be better if we get operating leverage. So any growth over 20% should give us EBIT margins which are better. I would say that we are more focused on getting our top line. I think this is a great time to look at market share gain. We've been looking at that for the last 2 years. It's been helping us, and we hope that once we get this, EBIT margins will grow. But that's not the real target. The target is to get the top line.
Okay, so going to focus on top line. That's the word coming in from Titan. But really, the stock of the moment is Idea Cellular. It's completely hammered out of shape. It's sitting at a 7-year low, as you can see, down about 12%. The telecom sector is in focus. Not just Idea, but Bharti is also under pressure. The tariff war has now intensified, with Reliance Jio unveiling a disruptive postpaid plan for both domestic as well as international calling. What could the impact be on other incumbent players? Reema Tendulkar joins us now with all the details. Reema, over to you.
Yes, big cracks in the stock price of telecom stocks. They've anyway been struggling. Bharti is down more than 25% in 2018. Idea is now down close to about 50%. The negative news today is Reliance Jio, after disrupting the prepaid segment, is now targeting the postpaid segment with its first offering called Hello Postpaid. So for a monthly payment of 199 rupees, you get 25 GB data, unlimited voice, unlimited SMS, premium subscription to the Jio apps, as well as some benefits on international calling. Now, this postpaid segment that Reliance Jio is trying to crack into constitutes about 5% of the subscriber base. But these are your premium customers. They have higher average revenue per user. So the revenue contribution to the industry could be as high as 20 to 25%. And that is the market Reliance Jio now wants. With its monthly offering of 199 rupees, it is cheaper than peers, which could be in a range of about 400 rupees. Not just that, Reliance Jio has also significantly cut international roaming rates. So calling to US or Canada can be as cheap as 50 paise per minute. Now, all this will clearly impact the revenues of incumbent players, which is why the stocks are trading weak today. A big cut seen in both Bharti as well as Idea. Kotak believes the impact on the revenues will be about 6 to 7%, while CLSA says the impact on Bharti could be 2 to 4%. On the Idea Vodafone merged entity, the impact could be 7 to 23% of their revenues.
Hi guys, welcome back. Those are SpiceJet's numbers that are flashing for you on your screen. Now, let me just take you through the numbers very quickly. The revenue growth has come in at about 25% at 2,029 odd crores. This is slightly below what the street was estimating. We did have one estimate that came in which was higher there, but it's really the costs that have gone up for the company quite a bit. The ATF costs, which is the fuel costs for the company, have gone up by 31%, coming in at 725 odd crores. And even other expenses for the company have surged this time around. So that's something that has impacted the bottom line for them. The net profits have barely grown. The expectation was much higher in the on the net profit front, and it is these costs that have really caused the amount to sort of be below what the street was expecting. The yields are fine, so there's no problem as far as yields are concerned. The passenger yields for the quarter ended March 2018 is up 8%, but it is two of these costs which have impacted the bottom line. Higher ATF costs and other expenses have gone up by 50% for the company, coming in at 188 odd crores. So that's why I guess the bottom line too has been impacted this time around. The company also does talk about rising fuel prices. They say that despite rising fuel prices, SpiceJet continues to record profits and has recorded the highest annual profits in its history. But that's the annual profit. Particularly for the quarter, there was an increase of 12.5% in crude oil prices that impacted the bottom line, but there was an 8% increase in yields. So what this tells us is that the yield problem which Interglobe had was specific to Interglobe Aviation and has not extended to other companies like SpiceJet. That's important, and I think that's the reason why you're even seeing the stock sort of recover from the lows. They say that yields have gone up. Remember, these stocks fell a lot after Interglobe reported their numbers because the fear was that the yield problem, the fall in yields would sort of extend to the entire sector. But no, SpiceJet has said that the yields have actually gone up for them, and despite higher crude prices, they have managed to see a good bottom line this time around. An 8% increase in yields. This compares to a 5.5% fall that Interglobe saw in yields. So SpiceJet definitely has done better than Interglobe when it comes to the yield performance. In terms of other operational parameters, it's the best passenger load factor for them. The average domestic load factor in this quarter was 95.4%. So that's higher than what they saw in the last quarter, and 35 months in a row the load factors have been in excess of 90%. So these numbers don't look as bad as what Interglobe's numbers looked, and that's why you're seeing the stock react. Just to quickly run you through the numbers once again before we move on, because the stock is reacting. 25% growth in revenues. Remember, the passenger growth was quite good for them this time, 21% passenger growth. So that has resulted in a 25% revenue growth. Yes, there was a jump in ATF cost to the tune of 31%. But that is because, the entire sector has witnessed that ATF price hike. Despite that, seeing higher yields, passenger yields, which is revenue per seat kilometer as we measure it, that has gone up 9% for them for the full fiscal and 8% for the quarter ended March. And that's something that the street definitely likes, the fact that they have been able to manage their yields in such a competitive environment. So now we know that Interglobe's problem was primarily its own company specific problem and not extended to the sector as a whole. So good set of numbers. I mean, of course, higher crude prices has impacted their bottom line, but they've managed to offset that with better yields and a very, very good revenue growth as well. So that's SpiceJet for you, reacting to that stable performance and improvement in yields. But let's move on. We also have the big story of the day. Fortis board has backed the Munjal Berman offer in the takeover battle. Ashpreet Sethi, my colleague, caught up with Sunil Munjal, the chairman of Hero Enterprises, and Anand Berman, the chairman of Dabur India. So let's listen in to what they had to say.
After you've put in the whole equity infusion of 1,800 crores, what will the duo hold?
So we'll be just shy of 20%. We'll be between about 18-19% or so.
Right. So then, Mr. Berman, I also wanted to understand, you've already explained, Dr. Berman, you already explained as to how the board might not change. But can we expect certain changes going forward? Because you've already asked for 3 seats on the board.
Well, that's the first change. Yeah. So if we get 3 seats on the board, that would be the first change on the board, right?
Any changes in the old management?
Doesn't look like it. Like I said, we've looked at the company from the outside so far, based on public knowledge, and based on that, we don't see any reason to change the management.
Right. So then, coming to the question that I'd asked earlier as well, the warrant conversion, is it going to be up to 176 per share, or is it going to be exactly rupees 176?
So the price that we've offered is 176. Or as per the SEBI formula, whichever is higher. So it's not up to 176, it is going to be at least 176.
Right. So then coming to the SRL diagnostics business as well, you've actually said that you might be looking at selling it. Now we do understand that Metropolis is one entity which is looking into it. So any talks with any investors right now?
So first, this is a bit speculative at this time, because, and also there is no active engagement that we have at this moment, because we are not even involved right now. It's only after we get involved that we can give an intelligent response to a question like this.
Right. So then, yes, coming to the shareholders, or let's look at how some of the board members have not agreed. So how hopeful, going by our sources, so how hopeful and confident are you that shareholders will be on board, because it's subject to approval that will be given on May 22nd?
First of all, we don't have the sources that you guys have. You're very resourceful on that. But we believe that the shareholders will vote with us and support us all the way through.
Just awaiting Havel's numbers. They're expected any time now. In fact, they've hit the exchanges. Remember, we're expecting a good revenue growth of almost 47% this time at 2,500 odd crores, a good margin performance as well. The stock actually has suddenly surged, so maybe there is a positive surprise in Havel's numbers. I'll wait for the ticker team to flash the numbers. Okay, there it is. Net profit at 225 odd crores. Yes, as suspected, these are better than what the street was estimating. I mean, a tad bit better. 217 crores is the expectation, and 225.8 crores is the profit number that has come in. So that, I think, is something that the street likes. But more importantly, it's what's happening with the margins. The revenue growth, of course, has been higher for the company because of the acquisition of the Lloyd's AC business. But we'll just wait by to see what the revenue growth numbers are. The stock for now is reacting quite well to these numbers. So I think we just have the profit number, but the stock is reacting well to that. All right. So I do have the revenue number as well. 2534 crores is what the revenue is. 2534 crores is also largely in line with estimates. It compares to about 2518 crores. So that's 2534 versus 1831. So that is a growth of almost 38% that we've seen on the top line, which is in line with estimates. Bottom line also largely in line with estimates. But these are a good set of numbers. In line or not, it's a really good set of numbers. I think what the street really likes is those margin figures. 14.1%. Remember, 12.7% was the expectation that we had, and this also compares to 13.4% same time last year. So the margins have really improved for Havel's, and that's why the street is giving it a thumbs up. Anisha is here. Anisha, looks like a solid operational performance for them.
Well, yes, it looks like a solid operational performance. Though top line is a tad bit below our estimates. We were working with a growth of around 47%. The growth has come in at 38%. But nonetheless, the operational performance of the company is strong. The other income has also gone down, but still the company has been able to beat the profit expectations that we had, and the reason is that the operational performance of the company has really been strong. If you look at the cost of materials, now that has not gone up as drastically as the revenue has gone up, and that's the reason we are seeing expansion in gross margins as well. I was looking at all the segments of the company. Now what is a bit disappointing is the cable business, because the revenue has remained flat year on year. Switchgears has also remained flat year on year. There is a bit of growth that we see as far as lighting is concerned. Now that has been doing well for the company. In the 9 months gone by, the growth for the lighting business was around 15%. The expectation was that this time around as well, it will be a double-digit growth, and looks like the company has registered more than that. The durable business also, the performance looks steady, 464 crores versus 400 crores. So looks like a decent growth coming in there as well. The run rate was around 8% for the 9 months gone by, and looks like the company has managed to continue with that. The good part is that cables margin is what has really come ahead of expectations. The cable EBIT has gone up to 132 crores versus 81 crore that they reported last year. So the expansion in margins of cables business is important. Now remember, earlier on account of GST, we had seen a bit of volatility come into the cable segment of the company. That has seemed to now really recovered, because the EBIT margin in cable business, I think, is what is really leading that operational beat that we are seeing, Sonia.
Absolutely. You know, I was just calculating it while you were giving us the numbers. The cables business margins has come in at 17% versus 11.5% same time last year. So that's a massive growth in the cables margins. Switchgears also margins have gone up, but moderately. So 38.5% is switchgear margins versus 36.8%.
And you know what, Sonia, cables is a very important segment for the company. If you look at the total revenue contribution from cables business, that remains strong. It is important to see whether this margin improvement is one-off, because 17% versus 11% does look rather strong. So we'll have to wait by to hear management commentary of whether there's a one-off element in that, because last year there was a bit of one-off element as far as the extraordinary gain is concerned, extraordinary loss is concerned of 77 crores. But nonetheless, operational beat coming in as far as Havel is concerned. Top line a bit subdued, but if you look at the internals that are really strong, cables business for me is the highlight. But of course, I'll wait by to see whether there are any internals that we should really keep an eye out on.
Okay, thanks a lot for that. So, as we said, a good growth coming in the cables business. The switchgear business also has done relatively well, and the stock, as you can see, has spiked up almost 2%. Thanks, Anisha, for that. With that, it is curtains down on Business Lunch. Good set of numbers coming in both from Havels and Spicejet, but mid-cap radar will take all the action ahead.